Hi, welcome to Bloom Accounting. In this video, I'd like to summarize and shed some light about all the various confusing relationships we hear throughout the Tax Act, such as related, affiliated, associated, and connected. Confused already? No worries, let me explain. Let's start with related. You can find the definition in section 251 sub 2 of the Tax Act. Commonly, we think of related as people sharing the same family blood, yes? It's much the same here for tax purposes and includes parents, children, brothers, sisters, and even sibling in-laws. However, does not include uncles, cousins, nieces, and nephews. I like to think about a cross. So up we have parents, grandparents, children, grandchildren, and then our siblings and the in-laws. Related can also extend to persons being related to a company or even two companies being related to each other, if controlled by the same person, related person, or group of related persons. Now, when you hear the type control, there are two types to distinguish. One is de facto and one is de jure. De jure control is control on paper, such as majority shareholder. De facto is not so clear and is based on influential factors. In terms of determining if two parties are related when dealing with corporations, we look at only de jure control, so paper control. Why does this matter? Well, you will find that there are special tax treatments between transactions made between two related parties, also known to be non-arm's length transactions. For example, if you sold a property to a related person below fair market value, you will find yourself in Section 69 of the Tax Act with treatment that may result in double taxation of the property. Now let's move on to affiliated. Affiliated definition can be found in section 251.1 sub 1 of the ITA. This includes your spouse and the companies either of you control. Easy peasy, right? So in essence, any transactions between your spouse or the companies either of you control don't necessarily result in a change in economic position, true? Hence, there are stop-loss rules in place, which I've done a video about for more information, that pertain to transactions between affiliated parties. However, something to bear in mind here is that control when determining if two parties are affiliated includes de facto control, which means control directly or indirectly in any manner. For example, if I loan $250,000 to my husband's business and can recall that loan on demand at any time, he also heavily relies on that money and has no other assets. I also sit on the board of directors and am highly involved in the directions of the operations. Even though I don't have shares, it seems I do have de facto control. Okay, next is associated. This is relationships between companies and is relevant because associated companies must share the small business deduction. Companies are associated when controlled by the same person or group of persons, or if there is cross-ownership of 25% and over of shares in the company that is controlled by a related person. Confused, right? So let me explain. If I own 100% of my company, and my husband owns 100% of his company, those two companies are not associated. However, if I subscribe to 30%, so more than 25% of the shares of his company, now the two companies are associated and must share the annual small business deduction. Last but not least, we have the term connected. The definition can be found in section 186 sub 4. This is relevant in determining taxation of dividends between companies. Now, two companies are connected if one company owns more than 10% shares of another. I hope the above explains the various relationships, and if you're confused, don't worry, I always have to reference the Tax Act and the definitions myself. So please feel free to contact us with more questions. Cheers.